But a hacker was able to go in and exploit discrepancies in the WYZRX UI and basically steal 43% of customers' Bitcoin. Bitcoin is only getting more valuable, so these hackers are only getting more sophisticated. And when you have all of this Bitcoin held in a centralized entity, that is a single point of failure. If there's one failure that happens at your institution, whether it's a hack or fraud or malicious software, which we've all seen in the past, your Bitcoin is gone forever. Then it becomes a question of like, what do we do? The only real solution here to actually absolve yourself of all of this risk, all of this counterparty risk that's associated with holding your Bitcoin on an exchange, is to take custody of your Bitcoin.
What's up, everybody? This is Dante Cook with Bitcoin Simply, and I'm the founder of Columbus, which I created as the first online Bitcoin community to help you navigate your Bitcoin journey. And today I'm super excited. We're going to be going through a topic that we preach about a lot as Bitcoiners, taking self-custody or truly becoming self-sovereign and controlling your financial future by removing your Bitcoin from an exchange. So we're going to go through the basics of self-custody, why it's important, how you do it, some of the mechanics of it. And then we're going to go to level 2, which is Multisig. This is how do we secure our Bitcoin even further by adding an additional signer to the process of moving our Bitcoin. And we're going to be doing that today with Joe Consorti. For those of you who are in the Bitcoin space, he needs no introduction. He helped to really build a lot of the content and foundation with Nick Bhatia at the Bitcoin layer. And he's since joined Theya Bitcoin, a YC Combinator company, as their head of growth. Joe is a young guy. He's one of the best analysts in the space. You put him right up there with Dylan LeClaire, with Joe Burnett. He is on that level, on that caliber. I'm super excited to introduce Joe to you all today. And we're going to be diving into the Multisig setup and how to use it live. I don't think this has been done anywhere in the Bitcoin space, actually signing and moving funds via a Multisig on a live webinar. So we're going to do this for you today and help to demystify all of this. So Joe, what's going on, man?
Hey, Dante, thanks so much for having me. And what a humbling introduction. I really appreciate that. And yeah, no, I'm very excited for today's demonstration. Really, the whole essence of multi-sig is that it's extremely secure. It's more secure than normal Bitcoin self-custody. And I can't wait to talk about why self-custody is superior. But for the longest time, multi-sig has been extremely difficult. And that's really what we're trying to solve here at Theya. So I'm very happy to be doing this live so we can really demonstrate how groundbreaking this is from a Bitcoin custody standpoint. We're removing all that difficulty, but making it just as secure as your standard multi-sig setup.
That's awesome, man. And I really do appreciate the style and approach that you all are taking. If Bitcoin does what we truly think it's going to do, if it's going to be $100,000, $200,000, $300,000 per coin, specifically now with all of the roadblocks moved from a regulatory standpoint, from an institutional adoption standpoint, and even from just an overall perception and messaging standpoint, it feels like a lot of those blockers that were in front of Bitcoin, the last several cycles are now removed. I don't know. I mean, you cover the markets better than anybody. You spend a ton of time in the Bloomberg terminal. You usually drop a Bloomberg picture almost every single day. What are you seeing out there in the macro markets, and what do you think about the forward projection of Bitcoin's price and price potential in 2025 and beyond?
Absolutely. So there's a lot to dissect. The main narratives going around are that the U.S. economy, even though the Fed raised interest rates so much to 5.5%, we did manage to avert a recession, and data is suggesting that consumers are more robust than not. Now, there are a couple of really scary things out there, and the reality is that in the modern era, we haven't been able to engineer this quote unquote soft landing where we have brought rates so high and then brought them back down while avoiding a recession. But data continues to suggest that we're heading in that direction, even though they lie through their teeth. And because of that, asset prices are reacting extremely well, particularly to what happened on Tuesday, Trump being the second president in history to get a second non-consecutive term, second to Grover Cleveland. It's historic. And regardless of who you voted for, what I really care about is the market's reaction to these things. And essentially what the market is, saying is that they're very confident about the growth outlook, not necessarily just because of a second Trump term, but because of what the Fed is doing as well with lowering interest rates despite really strong growth. And this is hallmarked not only in the price action of like the S&P 500 and Bitcoin, which are both rallying extremely hard over the last week, and they have been for several weeks now as these growth expectations have risen. But also with the fact that in the U.S. Treasury market, rates are on their way back up, particularly on the long end, since Powell cut interest rates by 50 basis points back on September 18th. The 10-year yield is up, I believe, something like 50, 60 basis points. And I'll go and verify that in real time. Since Powell cut on September 18th, the 10-year yield, which is considered growth and inflation expectations, is up from 364 to 430. And so we have risen a cool 63 basis points on growth and inflation expectations since Powell cut interest rates. And so, what this has really ignited now that the absolute level of rates are coming down is investors being really confident about growth prospects because now it becomes cheaper for businesses to borrow. That weight that's been weighing on consumers is being lifted gradually. And because of that, people are moving out on the risk curve. They're moving out of these increasingly lower yielding bonds into things like stocks and Bitcoin, right? And Bitcoin, chief among them, stands to appreciate the most. And so I'm very confident with where we stand. If you look at, the price behind me, I'll flip to, we're looking at $76,000 per coin. And so we're blasting through all-time highs day after day, and it seems like nobody's even talking about it, right? There's some euphoria, but not nearly as much euphoria as you've seen in cycles prior. And so that suggests to me that not only is Bitcoin in an extremely good position, but because of the lack of euphoria in the market, it suggests to me that Bitcoin has an unbelievable amount of upside potential. And one last thing, if you pair that with this is all confirmed by ETF inflow data. Yesterday, we had the biggest single day of net inflows to the Bitcoin ETFs in history. On both a Bitcoin basis and a dollar basis, there were 17,880 Bitcoin purchased by these ETFs on behalf of ETF investors, which equates to $1.35 billion. So that's the single biggest day. And what that suggests to me is that ETF investors are unbelievably confident about the path of Bitcoin and they want to get in before we have this next leg of this bull run.
Yeah, it's super interesting. I mean, a couple of things that you said there that I want to hit on. And I think it's really important for people to understand. One of the most fascinating things that I took from the election was how Polymarket was really kind of the leading red herring, if you will, for whether Trump was going to win or not. And the level of prediction that you have in certain markets, whether it was the Kashi index or others, and how accurate they were was almost directly correlated with how much liquidity there was out there. That's people truly voting with their money. And the thing that's happening right now, I mean, from the recent research that was done with Sam Callahan and Lynn Alden, Bitcoin is the global absorber of liquidity everywhere. Jeff Ross has talked about this, and it responds most most sensitively to global liquidity. And I think a couple of things that you're looking at here, this is the market globally signaling that more liquidity will come into the market. And the bond market is the tail that wags the dog, if you will. One of the things that's most interesting is that we've been talking about this flippening of Bitcoin from digital property and people moving away from analog forms of wealth creation and real estate to digital real estate and Bitcoin. I mean, ever since Powell cut rates, I mean, the mortgage rate is up to, I think it's almost 7.3% now. It's like, back over 7%, which is wild. And that's lenders and people who are actually looking at risk in the market saying, no, I need a premium above this Fed funds rate in order to take on that risk. And that's what the bond market is saying as well. I don't know if you have any things that you think about liquidity and Bitcoin and the amount of liquidity or risk premium that the market now requires in order to invest in quote unquote risk-free assets.
Yeah, absolutely. And so liquidity can be considered balance sheet capacity. And so it's correlated with like these how willing these creditors are to actually go and lend, right? And so you're exactly right. I mean, mortgage rates have been rising just like US Treasury rates have been rising, US Treasury yields have been rising since Powell cut rates. And so that means they're demanding a higher premium in order to actually extend these lines of credit. But if you look at credit spreads at the very same time, for high yield borrowers over the last month, they're down even further than where they were. And so if you consider premium needed for corporations to actually go and borrow for these banks to give money to corporations, that's still at cyclical lows. And so while on the consumer front, you have mortgage rates that are still exceptionally high and US Treasury yields that have risen a great deal, it's still the premium that corporations need to pay over the prevailing risk-free rate, um, in order to actually take on debt is still at cyclical lows. And so liquidity, for that reason, paired with global central banks easing in tandem, even though the US isn't easing at the clip that we thought they were, that's driving liquidity higher. It's driving balance sheet capacity higher. And so it's driving the proclivity to lend. And of course, we know money gets lent into existence. It's driving that proclivity higher. And so that's what's driving it. And then the other thing, too, is global money supply. So this is a little bit different from liquidity. It's actually the amount of fiat in various denominations circulating. And so Bitcoin is both the most sensitive asset to global liquidity, this global proclivity to lend, as well as global money supply. And so, given that both of these are on the upturn, it suggests that Bitcoin is going to continue to be the best vacuum if you want to hedge yourself against both of these different market events. Obviously, other risk assets stand to do very well in this environment. Relatively muted credit spreads, very robust and expanding liquidity, and rates coming down and the global money supply expanding. But Bitcoin is the only one that's absolutely scarce. And so we have this certainty, which is that rates are coming down, global money supply is expanding, and liquidity, even though yields are kind of fighting with the Fed a little bit now, who's lowering rates and yields are moving higher. Liquidity too, because of the global central bank easing impulse, is expanding as well. And so we have this certainty, this inevitability. And at the end of the day, as investors, and particularly if you're managing another person's money, it's your fiduciary duty to at least have some exposure to the asset that is proven time and again to be the single best hedge against all of this, the asset that appreciates by the most sensitivity during these market events, and that is Bitcoin. And if you look at a chart of Bitcoin overlaid with the global money supply, you'll see it clear as day. Bitcoin has like a 20 to 25x sensitivity to whatever the global money supply is doing. And given that global M2, once again, is in expansion mode, it means that you really want to allocate to Bitcoin. Otherwise, you'll kind of be left in the dust. And we see cycle after cycle, these people who are supposed to manage other people's money are failing and they're falling behind because they're not accepting Bitcoin. And the people that actually end up outperforming other money managers, other wealth managers, are those who take Bitcoin seriously and actually allocate seriously to it. And so that's kind of where we are from an M2 and a liquidity perspective, the factors that are driving it, and then where we're headed, particularly for Bitcoin.
Well, I think there's a misconception out there. You talk about money managers not allocating enough to Bitcoin or even at all, right? They're kind of laughed out of boardrooms or they're kind of taken as non-serious, which I don't think will be the case anymore, right? We actually had Bitcoin make it onto a proposal for a company as large as Microsoft. Or will be in early December to see whether they'll add it as a strategic reserve asset. But the fundamental, I think, misconception that people have is they conflate risk and volatility as the same thing. And yeah, of course, Bitcoin is volatile. I have 4 kids. If my kids were not volatile, if your kids were not crying and screaming and falling on the floor and doing stupid things, they would never grow at the rate and capacity that it would take for us to become mature adults. And that is the evolution of any asset class, not just Bitcoin. This is all of your hallmark stocks. These are different asset classes, even like gold. When you look at the volatility of gold from 1971, there's an extreme amount of volatility. None of it goes up in a straight line. And so I think that's the thing that is a misnomer for people. They think because an asset is volatile that it's risky. And what we talk about in Bitcoin, it's kind of labeled in the markets as a risk on asset or piece of technology that people want to invest in. But in reality, as you dig a little bit further, like Tim Smith, the CEO of Sotheby's, right, the big art auction dealer, kind of talking about doing his 1,000 hours in Bitcoin, you start to realize that Bitcoin is truly the greatest risk off asset. And this is what the heart of what we're talking about today with self-custody, because truly it's the only asset class that you can own, secure, and verify in a cheap fashion or manner that can't be confiscated, and it's protected by encryption. which is where crypto comes from, by the way, for so many people that lump Bitcoin with everything else. The first widely used crypto peer-to-peer digital network was Bitcoin. But nonetheless, this thing allows you to remove risk from the system, because every dollar, you talked about the Fed and lending dollars into existence.
Mhm.
Everybody should go out and read this book, The Creature from Jekyll Island. It's going to be probably one of the greatest sellers over the next few months. But you'll realize that the Federal Reserve was a created entity by 12 of the global elites in Jekyll Island in Georgia in the early 1900s. And the Federal Reserve is neither federal and they don't have reserves. So that's one of the most interesting things. But it really created this platform for fractional reserve banking, where I put a dollar into the bank and now they can lend that money out, up to 10 times the amount of that dollar that I put in. And that's created this system where the money that you actually put up and risk in your own capital is not actually there and can't be repaid when you go to ask that money back. And so, what we want to talk about today, and why we harp on this in the Bitcoin community, is how do we learn from the past? How do we remove risk from the system by taking self-custody of Bitcoin, and not just a Bitcoin proxy? Although we are happy about ETFs and Wall Street adoption, those things are IOUs, or paper slips on actual Bitcoin. And what we want to go to today and help you in your journey is, how do we move from owning a Bitcoin IOU to actual Bitcoin? Joe, I don't know if you want to dive in on that, but talk about Bitcoin being risk off, and what is self custody and why is it important?
Extremely well said, and a great transition because it plays into exactly what we were talking about. Bitcoin is the best proxy to global M2, but at the same time, you got to realize gold as well was the best proxy for this, printing of money, and then they seized it. Executive Order 6102,
Mhm.
FDR went and took everybody's gold. And as a function of this, it lost that risk-free moniker almost overnight, and we've begun to consider risk-free as the asset that can be held that's issued by an entity with an infinite balance sheet. And so, even though the U.S. dollar is diluted ad infinitum, more of it is printed into existence every single year. Um, and more debt is issued every single year at an accelerating rate because the U.S. government and the Federal Reserve have an infinite balance sheet. We've begun to consider U.S. Treasuries risk-free, when in actuality they aren't. If you actually take a look at the rate of monetary debasement, the rate of M2 growth, right? That should be like your baseline hurdle rate. Are you growing faster than the money supply is debasing you, or aren't you? And U.S. Treasuries, on a real return basis, over the majority of the years over the last few decades, that hasn't been the case. Particularly the period from 2020 up through 2023, the rate of inflation was actually higher than basically every single tenor on the US Treasury curve. And in order to get outsized returns, you had to move into those assets that weren't risk free. And so, really, what Bitcoin is kind of a referendum on what we consider risk free. And I think it's important to reject the idea that US Treasuries are risk free because they have inflation risk. Whereas Bitcoin was specifically designed to be an absolutely immutable hedge. This immutable monetary tool, this absolutely scarce tool against that inflation risk. And so, basically what happens, right? Fractional reserve lending, the creation of the Federal Reserve, reserve requirements, the amount of money that has to be held by banks in order to lend money out, that's been zero for years now. And so no money, it does when you put money in a bank, you think it stays there. It doesn't. They don't have to hold any of it. They can lend all of it out and then some, with multiple times over, right? And so not only is the money not there, but then credit is issued atop of the money that isn't even there. Money is lent into existence. Your money isn't actually held in a bank. And that becomes really, really dicey, not for banks that are large enough, because they can go to the Federal Reserve if everybody comes in and wants their deposits back. The bank no longer collapses like it used to during a traditional bank run because they run out of money. They no longer have to be financially savvy. They can lend out all the money they have and then some, because if people come running to the door asking for their deposits, the Fed will bail them out. And so now, basically, that's how our system has evolved. And we've seen what happens when bank runs occur for institutions that custody Bitcoin on behalf of clients. they don't have the same ability to run to the Fed if there's a bank run and tap their liquidity facilities and get their money back. They just don't. And we saw that, Jacob, if you want to show this first slide that I've got here, we saw that most recently with FTX. Everyone will remember. It's basically 2 years ago, almost to the day, when FTX, the world's second largest crypto exchange behind Binance, went completely under. It went under as a result of fraud that was happening behind the scenes. They misappropriated these customer funds because there's no, there's no regulatory requirement. There's no reporting requirement for customer funds. And unlike traditional banks that can lend all their money out and then they could get saved by the Fed if customers want that money back, crypto and Bitcoin exchanges cannot do that. And so what happened with FTX was this huge sweeping scale fraud that showed, okay, you can buy Bitcoin and get price exposure to it and benefit from the upside, but it does not matter if you don't hold it, because all of these exchanges need to be considered bad actors. No matter how reputable they may seem, if you're not holding your Bitcoin, this can happen to you. Exchanges do not have the same ability to go to the Fed and get a bailout when customers run for the doors and there's no money. They don't have the ability to do that. If there's a bank run that occurs at your institution, your funds are gone. The bank is insolvent overnight. The exchange is insolvent overnight, rather. And there are a whole host of other risks with exchanges that have caused these failures that go beyond what happened at FTX, which was fraud. You'll remember all the way back, in 2012, 2013 with Mt. Gox, there was a hack where all the private keys that were held on the exchange were compromised due to weak security measures, and it led to 650,000 Bitcoin being lost. And so not only do they not have this backstop of the Fed, but they can be hacked. All of the funds can be swept away. Obviously, things have changed since then. Things are more secure, but there is always a non-zero chance, especially as Bitcoin gets more valuable, that these hacks will occur. So your Bitcoin isn't safe on an exchange because it can be hacked, there can be fraud. And then most recently, this is an Indian exchange. What was the largest Bitcoin exchange in India, WazirX? They had a setup where they had a internal multi-sig solution, but a hacker was able to go in and exploit discrepancies in the WazirX UI and basically steal 43% of customers' Bitcoin as a result of internal failures. And so when these exchanges become so big and so popular, regardless of the security measures they have in place, Bitcoin is only getting more valuable. So these hackers are only getting more sophisticated. And when you have all of this Bitcoin held in a centralized entity, that is a single point of failure. If there's one failure that happens at your institution, whether it's a hack or fraud or malicious software, which we've all seen in the past, your Bitcoin is gone forever. And so then it becomes a question of like, what do we do? So the only real solution here to actually absolve yourself of all of this risk, all of this counterparty risk that's associated with holding your Bitcoin on an exchange, is to take custody of your Bitcoin. And Dante, to your point, Bitcoin is the only asset in the world that is a digital bearer asset. You could actually have physical ownership of a digital asset. And it's extremely low cost to do that. Whereas with gold, sure, it's an inflation hedge, but it costs an insane amount of money to go and store your gold bars in a secure fashion. And even then, somebody can break into your vault and steal it, right? Somebody can fake your credentials and get access to your vault and steal it. Or if you have it in your home, somebody could they could break into your home and steal it. And so gold is it's extremely difficult to hold. It serves a similar function to Bitcoin, but it's unbelievably difficult to custody. And so people are kind of halfway there by buying Bitcoin instead, but by relying on exchanges, you are risking it all. You don't want all the Bitcoin that you're buying for yourself and your future and your children to be swept from an exchange because you didn't take self-custody seriously. And the reality is, and I want everybody to understand this, as Bitcoin goes to 150,000, 200, a quarter million this cycle, hackers are only going to get more frothing at the teeth in order to get their hands on your Bitcoin. And so it's unbelievably important that you take custody of your private keys. And we can get into a little bit about what self-custody is and what private keys are, but I'll pause there for you, Dante.
I mean, that's great. I think that's, for me, that's probably the first thing that I hear a lot about from people is, Dante, the Bitcoin is this thing that I can't really touch or feel or take a hold of. It's kind of like they feel like it's like grasping in air, but there's kind of real validity to verifying your Bitcoin, your private keys, and these sorts of things. And the way that this has manifested itself, and it's one of the worst analogies out there in Bitcoin, is this idea about hardware wallets, right? Becoming where all of my Bitcoin is held. And I always like to give this demonstration here. There's a little trash can I keep in my office. Like you can throw, that was a cold card and a Blockstream Jade. You can throw those in the trash and still have access to your Bitcoin. How does that work, Joe? How does that even make sense?
Yeah, absolutely. And so it all has to do with your seed phrase and your private key. So your seed phrase is it can either be 12 or 24 words in order to restore your private key and get your funds back. Basically, what a private key is it is what you use to sign a transaction and gain access to your Bitcoin. And so essentially the way that traditional self-custody works is you take custody of your own private key, and these hardware wallets are devices that store your Bitcoin private keys. Think of access to your Bitcoin like a bank vault, right? And in order to access your Bitcoin, you need to open it up with your private key. This is your, and with hardware wallets, basically what it is it is a device in order to hold that private key. Now, there are many, it's obviously more secure than a Bitcoin exchange. These Bitcoin exchanges, they consolidate UTXOs and they have them across, and they store the private keys across several devices. But then, and even then, if those devices get swept, the private keys can get swept, the Bitcoin can get stolen. And so basically what you're doing, this is like the first step to security is self-custody, is any one of these devices. I have a whole bunch of them in front of me. This is personally my favorite because, basically the whole reason I joined Theya is because it simplifies Bitcoin custody. The foundation, the passport by Foundation Devices does the exact same thing too. All this is a device that can sign your Bitcoin away. It stores your private key, and it's a private key signing device. It's the same deal with something like a cold card, something like a ledger, something like a Trezor. Basically, it is one step more secure than a Bitcoin exchange because instead of the Bitcoin exchange holding your private key, you are holding it in this unit that you go out and purchase, and you store your Bitcoin private key on here. And then you could use it to sign transactions and move your funds away. And so
So Joe,
think
can
of
I?
this, to take the words from Obama, think of this as like a Swiss bank account in your wallet, in your pocket, essentially.
Well, it's not. I mean, a lot of people that have a trouble making the leap with the analogy. It's not too different than a credit card, right?
Mhm.
A credit card is a physical manifestation that we've built terminals and point of sale systems in order to sign for a transaction that says, I want to move money from Chase Bank to Chipotle. And that swipe, that black line on the back of your card is attached to an account number and a routing number, right? Which is your bank account, I guess, public key, if you will. And when you swipe that card, it says, I want to move funds from here to here. And that's all that happens in a Bitcoin transaction. Bitcoin is just like Visa, except, and it does have fees in the same way. But when you sign a Bitcoin transaction, you are swiping your Bitcoin card, right? And you're saying, I want to move money from this address to this address. And it's in its simplest form, a lot of people have trouble understanding what that means, but it's fundamentally no different than how we spend in transaction in today's economy.
Exactly. It's fundamentally no different. Essentially, one of these, no matter how robust it is, it's essentially as simple. And I love that analogy. It's as simple. The idea of signing a Bitcoin transaction. This is the equivalent of your Bitcoin bank and your Bitcoin credit card, right? The access to your Bitcoin is stored in here, and the ability to actually swipe and sign those transactions, just like when you swipe your card at Target or Chipotle, is in here as well. And so, while it is infinitely more secure than an exchange, this still represents a single point of failure. If you lost your Visa card, somebody can take all your funds away. If you lose, let's say your Cold card, and somebody knows both your anti-phishing words, and then if you have a PIN set up, if they know those things, or they've overheard them, or you've written them down somewhere, they can take that money too. And so, even though this is more secure than an exchange, it is still representing a single point of failure. That if somebody steals it and they know how to actually log into it, they can take all your Bitcoin.
So, what is multi-signature, right? So that, I guess at its simplest form, and the way that I try to explain it to people, it's sort of like if my wife wanted to go shopping at Costco, and when she swiped her card at Costco and it says there's about to be $800 thanks inflation, but the hot dog's still $1.50.
Mhm.
um when she goes to swipe her card, I would get a message, some sort of notification, if there was a user interface that said, your wife wants to move $800 from your account. We need your signature as well. Is that at a high level what happens in a multi-sig setup?
At a very high level, that's exactly what it is. So traditional Bitcoin wallets are a single sig setup, which basically means there's only one signature required in order to move funds around. And so in a single sig wallet, let's say that your wife was going and swiping her card at Costco, she'd be able to do that right away. It would only require her signature, and that swipe is her signature. It's her saying that I authorize the transfer of funds from the Cook bank account to Costco, right? Um, and that's basically what a single sig Bitcoin wallet is, whether you have a hot wallet on your phone with something like Moon Wallet or Blue Wallet, or whether you have a single sig wallet on a hardware device, it's all the same. It is one signature that's required in order to move funds, just like your Visa card, right? What multisig is instead of just one signature, just like you said, it requires multiple signatures in order to authorize the movement of funds. And so there's a natural inherent benefit to this. Obviously, the example that you just mentioned, you may want to confirm with your wife that it was in fact $800, and you may want to ask her to lower that, or you may approve that, right? You may ask her to go put some of the things back that she bought. I certainly know that Costco, I too find myself roaming the aisles, and the bill gets run up pretty high. But it also might be a case, and so might want to authorize that before it goes through. But the other instance where it's really useful is if there's an instance of theft. If somebody goes and tries to sign away a transaction, and you get a notification that says, we require your signature to authorize the movement of $2,000. And you go, I don't recognize this. You don't sign it. Your funds don't get moved. And so instead of like a Visa card where you swipe it and then the funds are gone, right? You swipe it and then there's an additional signature, there's an additional approval, a checkbox that's required in order to move those funds. There's an additional Visa card required. That's basically what multisig is. And so, instead of having your funds, basically the way that it works is instead of having your funds distributed across one private key, your funds are distributed across multiple private keys. And the most popular way to do this is a 3 private key setup where 2 private keys are required in order to sign away the funds. And basically, the way that that works is the private key can be stored anywhere, traditionally stored across hardware devices. And then, in order to move funds, 2 of 3 of those keys need to sign away funds. The most helpful analogy that I've found for this is like a bank vault. In order to gain access to a traditional bank vault, let's imagine this box here, you need 1 key in order to open it up. With Bitcoin multisig, you're eliminating that single point of failure. You eliminate the risk that somebody finds that key and is able to open up your bank vault by making 3 separate keys, 2 of which are needed to open the bank vault. So now you need 2 of any of these 3 keys in order to open up the bank vault and access your funds. Now, the benefit of this, the benefit of having 2 of 3 keys instead of just 2 of 2 keys, is that let's say you lost one of those 2 keys, your funds are gone forever. Whereas if you have a 2 of 3 setup, so 2 of the 3 keys are required to access this bank vault. If you lost one of your keys, you still have access to your funds because you have those 2 keys remaining. And so that's the benefit of multisig. You are eliminating single points of failure from your Bitcoin setup. And so let's say you have a hardware device and you haven't actually backed up your seed phrase. There's no other way to restore this private key. If I, went and dumped this in the trash can, my Bitcoin's gone forever. Versus if I have my funds distributed across these 3 devices and I lost them, I lost one of them. Let's say I lost this treasure. I still have these 2 signing devices that I can use to access my funds. And so that's the benefit of multisig, but there are some inherent challenges to that, namely a technical challenge. Um, as your Bitcoin holdings get more valuable, right, people want to move to a more robust solution. But multisig is so difficult. it's very, very difficult. It requires a high level of technical expertise. The basic test I use for whether or not a Bitcoin storage method is viable is if you give it to grandma under the Christmas tree and she'll know what to do with it. If you give grandma, these hardware devices, more often than not, she's going to have no idea what to do. They require guidance. And if you tell grandma to set up a multisig, she's going to have absolutely no idea what you're talking about. So that's basically the test that I use, like the mental test that I use to determine like the viability of a Bitcoin storage setup. And historically, multi-sig has been so difficult that basically nobody uses it, even though with all the examples we just described, it's infinitely preferable and more secure than a single sig setup. It's just not ideal for consumers. It's not ideal for the everyday person who has a lot of Bitcoin, but doesn't know a lot about the inner workings of Bitcoin. And so for that reason, multi-sig usually falls flat on its face. And that's that's the problem that we've engineered away at Theya.
So before we go in, I like that sort of analogy there because a lot of people really struggle with this, and I struggle with this too. It's a level and a matter of education. If I were to get hit by a bus, does my wife or does my brother-in-law or my father-in-law or my father or anyone else in the equation know and understand how to manage the Bitcoin that I've entrusted to them? And that's one of their biggest fears around multi-sig, because the strongest plans are foiled by the weakest link. And that is one of the things about, one of the hurdles is I've helped to consult so many people on this topic that they have with multisig. Now, one of the other big discussions that I hear and one of the big pushbacks you hear is, doesn't that just create more complexity than a single sig? What if I had four words from my seed phrase in 3 different locations and backed up at multiple places? Why wouldn't I just have, multiple pieces of my seed phrase in geographically distributed places versus a multi-sig? What would be sort of your answer to that? Because that's one that I hear as well. Does multi-sig create more complexity than just a single sig that you do different things with? Which I don't necessarily agree with, but I would love to hear your opinion on it.
Very good point. And I'll put it this way. Multisig does not, it introduces more complexity, but it's more secure than if you were to break up your seed phrase, let's say, into different locations. Because the difference with the 2 or 3 multi-sig setup, if you lose one of your wallets, you could still use the other 2 to access your funds. If you lose a portion of your seed phrase that you've gone out and stored somewhere, your Bitcoin's gone forever. Let's say you have a 12 word seed phrase, you break it up into 3 chunks, you break it up into 4 word chunks, you inscribe all of them on separate plates, and you go store them at various locations. Let's say some accident were to happen to you, or you were just to flat out forget where one of those is, your Bitcoin's gone. And it's going to take you forever to guess even those 4 words that you lost. And then that becomes even more complicated if it's 24 words. You still choose those 4 word chunks. Now it's stored in 6 places. And so while, that is certainly a solution that you could have, the 2 of 3 setup, what it inherently does, it has this allowance for user error. And we know as humans, Dante, you and I know that, humans are prone to sin, but we're also prone to stupidity sometimes. We're prone to human error. And so you need to consider the human error component. If you were to store your Bitcoin on a single signing device and then back that seed phrase up over multiple locations, 3 or 4 locations, that still opens you up to human error. And if you forget where one of those is located, then your Bitcoin is gone forever. Whereas in a multi-sig setup, a 2 of 3 setup, there is an allowance for human error. And so that's kind of what I would answer. It's more complex, but with that complexity, you get the added security. And again, what it boils down to is removing the difficulty from a multi-sig setup, making it extremely easy, and making still preserving that security, but also that allowance for user error that makes multi-sig so unique.
So here's the moment that we've all been waiting for. And a lot of people out there don't know about what Theya is. So people have maybe heard of Casa, people maybe have heard of Unchained, or maybe their Caravel Vault. People have heard of, different products out there, Swan Vault. And tell me a little bit about Theya, because you guys are a bit of a newcomer to the ecosystem. I really love what you guys have been doing and the UI and the UX of your platform. But give me a breakdown into Theya, and then tell us what we are going to be doing here that I don't know has been done anywhere live, but super excited to do this.
Absolutely, Dante. So Theya is there have been multi-sig companies and multi-sig offerings on the market forever, and they're all fantastic. But what Theya has done is we have stripped away all of the complexity that is associated with a multi-sig setup. We have made it as easy as is humanly possible to create robust Bitcoin vaults for long-term savings. We know that even if you hold zero point 0.2 Bitcoin or half a Bitcoin, eventually that's going to become worth six figures and beyond. And you don't want to hold that on a single sig device, no matter how easy it is to access. But the hurdle that users need to overcome to start doing multi-sig, even with other solutions, for many people, it's too high. And so currently there are millions of people self-custody. There are only about 40,000 people, 50,000 people around the world that have multi-sig. So think about that. Over time, I know, and us at Theya, we believe, and that's why we created this company, is that in order for Bitcoin to succeed, we need people to use it the way it was intended. And we need more people using multisig. It's not the only way to store your Bitcoin, but it is right now the best way to do it. And so what we've done is we've created a mobile first solution with an extremely simple, very easy to use and familiar UI that strips away all the difficulty and allows users, regardless of their technical ability, to set up a Bitcoin multi-sig vault straight from their phone, whether you're on iOS or whether you want to use our web app too. We've also created this on web, and coming very soon, Android as well, because I know a lot of Bitcoin users, Bitcoin holders, Bitcoin maxis are Android users. I myself am an Android user. I have the Samsung Galaxy S22 that's coming soon. But what we've done is we have made it uh, simpler than ever to set this up. And there's no hand holding that's required throughout the process. And that's another thing that makes Theya entirely unique. There is no entity that you have to interact with. You don't have to set up phone calls. You don't have to set up, concierge onboarding calls. You can if you'd like to. We offer that. But what we've done is we've made Theya as simple as downloading an app, creating an account, and setting up the vault. And what we've done is we've created a very familiar and delightful experience, but also step-by-step instructions within the app for anybody of any technical level to go and set up Bitcoin multi-sig vaults. And the real benefit here, the huge benefit that really sets us apart from these other firms, other than our great mobile-first iOS and Android app solution to actually set up these vaults, is that we are live. Theya is available anywhere that Bitcoin is legal. And so rather than being a company that's domiciled in the United States, we're a financial services firm. And so we are exclusive to the United States or exclusive to North America. We are legal anywhere Bitcoin's legal. And so you could set up Theya anywhere from Indonesia to Mexico to Argentina, anybody, anywhere globally. If Bitcoin is legal, you can set up a Bitcoin multi-sig vault. And that's what sets us apart, not just the simplicity and the difficulty that we've stripped from the setup, but the fact that we can be used anywhere, we can be used globally, because we are fully non-KYC. In the app, there's a buy Bitcoin feature that does require KYC, but if you're just downloading and setting up a Bitcoin multi-sig vault, you can preserve your anonymity, and there's no KYC required other than an email address. You can also add an alias if you'd like to, but the only thing that's required from you is an email address, and you can get started today. And so that's kind of how Theya differs. And obviously, we're very new to the scene. We're lean and mean. We only have 5 people, 6 people working at the company currently, 2 engineers, 3 co-founders, and then myself, and then also our design lead. So 7 people working at the company. And it's an extremely exciting time to be in Bitcoin. And it's a very exciting time to be building this app because it is so revolutionary. We're breaking down the barrier to entry that's historically been there with multisig, and we've made it. And this is the big kind of statement that I will make. Theya has made multi-sig easier than setting up a single sig hardware wallet on your own. We have made it easier to set up a Bitcoin multi-sig vault and a collaborative vault, if you'd like to, than setting up a single sig hardware wallet on your own. And we can demonstrate that as well.
That's pretty cool. I mean, and for all of the people out there, maybe you have experience, you've heard about Sparrow Wallet or Spectre Wallet, the desktop software that were non-KYC that you could download directly onto your MacBook or your Linux, device or computer, and then be able to have a visual interface into looking at your Bitcoin. I mean, those go down to the UTX O level and allow you to send and receive Bitcoin, but really they're a user interface to allow you to move, send, and track Bitcoin. And so you guys have done that on a mobile level, like in your pocket, which I
Mhm.
think is very valuable. It's very unique. And I've been through the setup and it's very clean and very user friendly. So maybe today, I mean, I'll let you kind of dive into your presentation here, but I'm really interested to see this live, and then maybe we could collaborate or sign transactions together in two different places live on a webinar.
100%. Let's do it. Yeah. I'll run through the rest of this presentation, Jacob, and then Dante and I will do a live demonstration. And again, Dante and I are nowhere near each other. We are hundreds of miles apart from each other. I'm up in the Northeast. Dante is not. We are hundreds of miles from each other. And we're going to demonstrate just how easy it is to set up a collaborative vault, but really just to hammer home the value proposition of multisig and then why Theya is the best solution for it. So the current problems with exchanges, we went through these. You can get phished, and it's very easy to get phished, and phishing scams are getting more sophisticated. Users get tricked. Hundreds of users get tricked every single day. With exchanges specifically, if we're talking about other websites, you're talking tens of thousands of users every day that are falling victim to providing login details to fake websites. I know everyone in this call at some point has received an email from something they're signed up to, and it looks so real. Even the email address looks extremely real, but some part in your head prevents you from doing that. But sometimes the people fall victim to these. Even extremely technically literate people fall victim to phishing attacks. That's one vulnerability of exchanges. Another is account takeovers, right? This could happen to you while you are asleep. 2 years ago, basically like 3-4 months after we launched the Bitcoin Layer YouTube channel, we were cranking, we were doing extremely well. My computer that was logged into the Bitcoin Layer account was hacked remotely. It was turned on. So my computer was off. My computer was turned on. Hackers were able to log in and basically private all the videos on the Bitcoin Layer YouTube channel, turn it into a fake live stream, and we got banned because of it. And so even if you think you have a great 2FA, people can still access your login credentials, remotely access your computer, and sweep all of your funds. And it happens daily. It happened to me. And I work for, basically, we have a huge cybersecurity component at Theya. And even I was able to be exploited because of systems that have weak 2FA. And then another thing is no transparency, right? Exchanges do not disclose how they manage their customers' assets. There's no way of verifying. River is the only major Bitcoin only exchange that has done proof of reserves. That should be the gold standard, but unfortunately, it's extremely difficult to verify if the Bitcoin that's purportedly held in the exchange is actually there. And so these are the key problems that customers have with exchanges and the current solutions that there are for Bitcoin custody. And this is in order of security. So centralized exchanges, we already talked about. I am using a Windows machine, Kevin. That's exactly right. That's one of the reasons why. So centralized exchanges, we already talked about the counterparty risk associated with that, the vulnerability to hacking. And then there are single signature wallets, which we talked about. But even these are prone to human error. And the entire burden of security is on one key, and it's prone to human error. If this gets taken away, if I have poor best practices with this, if I store my seed phrase for this on my computer, my funds are gone. And so they're more secure than exchanges, but less secure than where you could be. And then the final and most secure, and what a lot of people use who are serious about security, is hardware wallets, right? These are very secure, but ultimately they're complex and they still represent single points of failure. And so the solution for this, right, what we've created is Theya, a new standard for Bitcoin custody. And basically, we've created a multi-key digital vault with a built-in backup. So that third key is actually for recovery purposes. The user is only responsible for holding two of the keys. And then in the event that you report one of your keys is lost or compromised, on the back end, the Theya recovery key, which is encrypted end-to-end, gets unencrypted. We contact you. We're able to verify it's you based on your security questions, and we're able to help you move your Bitcoin to a new vault. And so we are revolutionizing Bitcoin custody. We are moving from these, which have a whole slew of vulnerabilities, to a new solution that eliminates single points of failure and makes it so that not only is your Bitcoin secure, but it's extremely easy to set up. And so basically this diagram here, within the multi-key digital vault, there are three keys, two user keys, and we'll talk about where you can what devices you could use to create those keys in a second. There are 2 user keys and then 1 Theya recovery key, 3 keys total. And you look over to the right, any 2 of those keys are required to sign transactions. You can either sign transactions with both of your keys, key number 2 in the Theya key or key number 1 in the Theya key. So if you lose one of your 2 keys, you can back up your funds immediately. And so this is a really beautiful thing because it seamlessly integrates with devices that everybody listening to this already uses. You're watching this on a computer. You can set up a Theya Vault on your computer. You're watching this on your phone. You can set up a Theya Vault on your phone. It seamlessly integrates with the devices that you already use. And again, with this 2 of 3 multisig setup, you hold 2 keys. Theya holds the 3rd key for recovery purposes only. So you're eliminating single points of failure in your setup, but you also have this additional key held by Theya that's only activated when you lose one of your keys for recovery purposes. And so you've eliminated this single point of failure that leaves you vulnerable when you keep your keys on exchanges or when you keep your keys in a single sig device, whether it's a hot wallet or a cold wallet. And the big thing, the final thing here, again, is that it's mobile first. It's mobile first. If you don't want to do it on a phone, you don't have to. You could do it on web. But because we have engineered this first principles from a mobile first perspective, we have created an extremely simple and easy to use interface that anybody, regardless of technical level, can use. I will say this is easier to use, and Dante and I will demonstrate this in a second. That I don't mean to draw this out. It's easier to use than most hot wallets that you will find. Most hot wallets that you will find that have been engineered for iOS or Android. And so these are all the supported platforms we have. Android's coming soon. You can currently set up and access Theya on your iPhone or desktop or laptop, whether you're Windows, Mac, or Linux. And then the devices as well. So we currently support keys to be generated on the iPhone, which is something that I know Foundation has also done with its Envoy app. You can generate a private key and store it in your iPhone's secure element that cannot be accessed by anybody, even Apple. And then within that setup as well, you have the option to back up your encrypted private key to the iCloud keychain, which is an encrypted end-to-end cloud platform that is accessed using your passkey, using your Face ID. And the benefit of that is that you have the security that is on par with holding a private key on a hardware wallet. But if you were to lose your phone that this private key is on, let's say in a boating accident, then you have the ability to get a new phone, sign in with your iCloud or your Google account, and then restore your private key to your new phone. And it's all validated using your passkey or your Face ID. And then if you're more traditional and you want to avoid that kind of key, you're not required to. You can also set up your keys across all of the Trezor devices, including the brand new Trezor Safe 5, which is not on this chart, all the Ledger devices, all of the Cold Card devices, which it looks like the graphic there is wrong, including the Cold Card Q, which again is not on this diagram, as well as the Foundation Passport. And so really we integrate not only with the devices that you already use as daily drivers, if you've never used a Bitcoin wallet before, but also all the biggest and most popular Bitcoin wallets as well. And so this is kind of the final slide, how we wrap this up. We're client friendly, right? So very easy setup and management using very familiar devices. We're very secure, right? So multiple keys are required to sign transactions, which reduces risk. And then we're scalable as well. You can create as many vaults as you want with the Theya app, with the Theya Essential Plan. You can create unlimited multi-sig vaults, and you can manage them either from your iPhone or the brand new Theya web app that we have launched. And so really that's kind of, again, just to reiterate, the value prop of multi-sig and then the value prop of Theya as well. And we can dive straight into the demo if you'd like to.
Really quick, before we dive into the demo, one thing that confuses a lot of people is when we talk about hot wallets versus cold wallets. Like, what do you mean? Did you put the wallet in the microwave? Hot wallets versus cold wallets, software wallet versus hardware wallet. I mean, maybe break those terms down for people because maybe they don't understand what hot and cold is, or software and hardware, and that might be good. And then we could jump right in.
Right, absolutely. I should clarify. So a hot wallet would be something like this. So I'm firing up my Android phone now. A hot wallet would be something like Blue Wallet. Basically, it is kind of, if you think about like your checking account versus your savings account, if you want to really easily move Bitcoin, you usually hold it on what's called a hot wallet, which means that it is not on a dedicated device. It's usually held on your phone or on your computer, and it's used for just sending and receiving funds. And this is what a hot wallet would look like. This is the Blue Wallet app. I also have Moon Wallet, and it's basically just Bitcoin that is held on your phone in a semi-encrypted manner, but still risky. If you were to lose your phone and they guess your PIN, your Bitcoin's gone forever, right? So that's a hot wallet versus a cold wallet. It's kind of like a checking account versus something like a savings account, right? And it's less secure because of that, because it's held on your computer or it's held on your phone versus a cold wallet, which is generally held on a dedicated device like any number of those hardware wallets there.
All right, that's good. All right, cool.
Fantastic.
Yeah.
All right, I love it. Well, we'll dive into it. Patrick, to answer your question, Blockstream Jade support, we are currently in the process of launching that and adding that. It's on our roadmap. It'll be here before the end of the year. So, with that said, I'll pull up the iPhone and then I'll go ahead and present it, and we will be on our way. And then Dante, you'll also fire up the Theya app, and we'll get going here. So, Jacob, if you want to share that iPhone that I just shared, perfect. So, this is what the Theya app looks like, and I'll show this feature really quickly. Anytime you want to get into, what's up, Mark? Welcome. Thanks for joining us from Guatemala City. Thank you very much. So, this is what the Theya app looks like. You can download it on the App Store for free. Android's coming soon. You could also access the web app version at app.theya.us. Anytime you go in, you could set up your Face ID, which we would highly recommend. And anytime you exit the app and come back in, you're going to be prompted for that. So it's just an added layer of security. Now, when you first set Theya up, this will not be the screen that you see. You will just see a screen that says secure your Bitcoin, right? Create your first vault. Now, this is what the vault creation process looks like. Once you've created a vault, this is the screen that you'll see. This is your dashboard, and we'll walk through that a little bit later. But as you can see, you can create unlimited multi-sig vaults. You could see I have done a lot of these demonstrations at the Bitcoin conference. I think I made like 30 multi-sig vaults to demonstrate. But if you want to create a new vault, you just go up into this top right corner here and you click create new vault. And you can name it whatever you want. So I'm going to name it Dante plus Joe because we're going to do a demo of a collaborative vault today. And you can only use letters and numbers. And the reason we do that, and we also have a character limit, is because for devices like the cold card, there are specific character limits and characters that you can't use. And so we've made sure so that Theya is compatible with everything, that we're complying by all of the naming conventions that are required for these different hardware devices. So I'm naming it Dante and Joe. And here you could choose between multi-sig and single key. And so that analogy I gave a second ago about a checking account versus a savings account, if multi-sig is more like your savings account, your long-term storage account, if you want to create like a hot wallet or a wallet that's used for payments, you can create a single key wallet as well. But again, it's more secure than a hot wallet because you could basically create a single key vault from Theya. It's a UI for creating these vaults. You could create a single sig vault for your cold card and then manage all your cold card transactions from Theya instead of something like Sparrow. Or you could create a single key wallet on your phone. So instead of having a hot wallet on your phone that is unencrypted and can be your funds can be swept, you can use a single key wallet on the Theya app that you could still use for payments, like a few $100 here and there for paying people in Bitcoin. And then have a multi-sig vault created in there as well for your more long-term savings. And it's very easy to switch back and move Bitcoin between the two. But anyway, we'll click proceed to set up. And the first thing that happens is you set up the Theya recovery key. And so the recovery key, again, it's securely managed by Theya. We have a proprietary geographically distributed solution for this. And it's used to recover your vault in the event of an emergency. So if you report a key is lost or stolen, Theya gets in contact with you and we move your Bitcoin. We help you move your Bitcoin to a brand new vault. So this is how easy it is to generate the recovery key. And again, in the Theya app, it's perfect for people who have very little technical know-how about Bitcoin because it explains what the recovery key is. So again, it helps restore your funds if any key is lost, and it's secured by Theya managed HSMs and kept offline. And then security without KYC. So I mentioned there is no KYC required here whatsoever. You don't have to put in your name, your address, anything like that, social security number. It's no KYC. And so that's the benefit of Theya over other multi-sig solutions. Not only are we global, but we do not require KYC whatsoever. The only information that we do collect, if you would like to, is your Face ID, which you do not have to do, and your security questions, which again are used to help us verify that it's you during the recovery process, and prevent it from unauthorized access. And so we click continue. And then just like that, the Theya recovery key gets created. So that's one key. Now, here's the very cool part. So I'm going to add the first key, and we get the option to either add, you generate a key on our iPhone or generate a key on our hardware device. Today, we're going to demonstrate the iPhone flow. So what it looks like to create a collaborative vault. So vault between me and Dante, one key with me, one key with Dante, using our iPhones. You can do this with a friend to help orange pill them, or you could use it with a spouse. In order to create kind of a shared Bitcoin vault that is managed entirely on your phone. So what we're going to do here is click iPhone and then generate mobile key. And again, it provides an explanation here. It's stored in our devices, in the device's secure element. It's stored in the device's keychain, rather, protected by the iPhone secure enclave for maximum security. Now we're going to go and generate this mobile key. And then all it will require is our Face ID. And then you have the option here, number 2, to actually go in and decide to back up your key to the iCloud or not back it up to the iCloud. It doesn't have to be if you don't want it to be, but here, for recovery purposes, I'm going to do that. And then what we can do is rename the key too. So I'm going to name this one Joe's iPhone.
Hey, Joe, really
Yep.
quick, as far as the backup and the encryption behind the iCloud, a lot of people, like, kind of when they hear iCloud, they think about the cloud and don't know maybe the difference between, or know that Apple has a secure element on the device.
Mhm.
So maybe talk a little bit about that. That's kind of one fear. Oh, isn't this just going into the cloud? What if Apple, were decided to take my private keys?
Exactly. Yeah. So a little bit more clarification on that. So basically, what the secure element is it's engineered in such a way, that if your phone were to be basically destroyed and you gave your phone to Apple, they would not be able to access any of the encrypted information in the secure element. Only you can access that, and only you can access that with your Face ID. And this is standard practices with all iPhones, and it's also standard practices with Android phones as well. So Android phones have secure elements too. The reason it's taken so long to launch the Android app is because every different Android has a different style secure element. Google Pixel, Samsung, Huawei, but basically the secure element, Apple cannot get into it. And so we've created this as an option for people who understand the secure element and are comfortable with it. But it's not required. You don't have to create a Theya vault that has your iPhone in it. You can create a Theya vault that's between 2 cold cards, right? Or you can create a Theya vault that has an iPhone and a cold card. It's fully modular, so you get to choose where you want to store your keys. Um, and then because what's in your secure enclave can only be accessed using your Face ID, or if you're on Android using a passkey, you have the ability to back it up. And so, because Apple does not have your Face ID, they do not have your face. All they're doing is storing that information. They cannot steal your Bitcoin from the secure element. But the benefit of having it in your secure element backed up to iCloud is if you lose your iPhone, you can log in using your iCloud, download Theya, and then recover the key using your Face ID. Again, this is an option, and it's we created this because of the encrypted nature of the secure element and the encrypted nature of the iCloud keychain, but it is not a requirement in order to set up the Theya vault.
Sure.
Beautiful. So yeah, we can resume here with the demo. So this is the fun part. So this is the part where I actually go and invite Dante into this vault. And this is revolutionary from an orange pilling perspective, or this is much simpler than creating a shared bank account. If any of you have, gone and set up a shared bank account or tried to manage that, it is extremely convoluted. This is very easy. So when you add your second key, you're prompted 2 different things. You can either add a new hardware device, or you can invite a trusted contact. So what I'm going to go do here is actually invite Dante, using the email that he provides me, to his Theya account. So Dante, your email is Dante.
Dante, Dante, at sub
Mhm.
texts like multiple text.co.
.co. Perfect. So that's all you need to do. And you can do this if nobody has set up, even if they haven't set up a Theya account just yet, you do not, they do not have to set one up. If you send the invite and they don't have a Theya account set up, they will receive an email that gives them step-by-step instructions. It'll tell them to either create an account on web or download the Theya app, sign in with that same email, and then they'll get prompted, like we'll show in a second, on Dante's side, to finish this vault setup process. So I'm just going to click send invite, and then we're all good to go. So it says we've sent a pairing invitation request to dante@subtext.co.
Yep. And I just got a notification here on my phone to review the vault invitation.
Fantastic. So Dante, go click on that notification.
I can review this invitation, and Joe.Consorti, Theya.us is inviting me to join their vault. So I can accept and proceed. And I'm going to use now I have a choice to choose which devices I would like to sign with. So I think this is actually really nice, because what I can do in this scenario is I can use this kind of iCloud encrypted backup on the secure element, just for purposes of this demo. But if I wanted to get my cold card out of the trash that I threw in the trash earlier, I would be able to use that as well. This sort of just acts as a skeleton and allows me to bring my own device, if you will.
Exactly. It's fully modular. So you can create collaborative vaults or self-managed vaults using whatever vaults you want to. And there you go. On my end, you could see it says your co-signer has accepted your invitation and created a key. And now you can click continue to create vault. Now, as soon as I click this, we're done. The vault setup has been completed. You can see in the top right there, it says Dante and Joe. So this is our new shared Theya vault. So Dante, how easy was that?
It's pretty straightforward. I'm actually kind of surprised at how quick and how fast it was, to be honest.
That's the biggest feedback we've gotten. The biggest feedback we've gotten, one of the biggest pieces of feedback, I think the second most to, wow, that was easy, was that was so easy, I think I probably did something wrong. But that's the kind of feedback that we want to be getting when we're creating an app like this. And so just like that, the collaborative vault has been created. And again, if Dante didn't have a Theya account set up, he would just be sent an email to that email address, basically saying the exact same thing. You've been invited by blank to set up a Theya collaborative Bitcoin vault. He would go through the same exact process, and now the vault has been created. So now we're going to demonstrate how to move funds into this vault. And then Dante and I are going to demonstrate what the flow looks like to actually sign funds out of the vault.
So one thing I want to stop people here really quick, you see send and receive. Those are the two primary protocols, similar to email, the hypertext transfer or email SMTP protocol that allows me to have a to address and a from address. Now, these are pretty simple ways for us to identify Dante at Subtext or Joe.Consorti at Theya.us. But in the Bitcoin world, there's a to address, which is a BC1 character or some other derivation of that. And then there's a from address, which is who's sending or receiving funds. It's no different than if you opened up Venmo or Cash App. You can receive funds from another place, or you can send funds to another place. So a lot of people have a lot of confusion about that. They get caught up in invoices and everything else. It's pretty straightforward when you're dealing with the network, and this isn't necessarily the same thing as you might deal with an invoice from Lightning.
Exactly. Extremely well said. The analogies are so helpful because really what we're doing at Theya and what you're doing, Dante, at Columbus is we're trying to demystify all these things. We're trying to make Bitcoin simple, right? It's simply Bitcoin, right? We're trying to demystify all of these different elements of Bitcoin that are really confusing, because we know that Bitcoin is the future. We know that given the fiat money regime, it's inevitable, but we're not going to get to that bright orange future if people don't understand what's going on. And so the whole mission of Theya and the whole mission of everything that you do, Dante, is to really demystify these elements of Bitcoin and make them easy to digest using terms that people understand for the masses. Phenomenal. So we're going to demo what it looks like to move funds into a vault. What you can do is you can receive Bitcoin any number of ways into your Theya vault. You can do it via QR code. And so what you can do is you can take a picture of this if you're moving it from another vault, or let's say you're moving it from Coinbase, you show it to your webcam. Or what you could do, which is what I usually choose to do, is I copy this BC1 address down there, and then I go and I paste it into River, Coinbase, wherever, and I send my Bitcoin to this address. But what we're going to do now is actually move funds between Theya vaults. So I'm going to click. I think I have a single key vault that has some funds in it. Yes, we do, right here. So I'm going to send all this Bitcoin into mine and Dante's new vault. Not a lot of Bitcoin, only $11, but I'm going to go and send it. And you could also hide your balance as well. So if you're managing your vault in public, or you just don't want people to see, or you're afraid that the CIA is in your home and they've implanted a camera in your block clock, then you do not have to reveal your vault balance. But I'm going to send this to a Theya vault. And this is a warning screen. So it says, ensure the recipient's Bitcoin address is accurate, because if you send Bitcoin to the wrong address, your Bitcoin will be lost. So these things can't be undone. So always double check the address before transferring. I understand. And now up here, we have the option to send Bitcoin to an address, or scan a QR code, like I mentioned before, or we could send between vaults. And so that's exactly what I'm going to do here. You can see I have a bunch of vaults set up. I'm going to scroll all the way down to where it says Dante and Joe, this new 3-key vault. And I'm going to, let's say, send 40%, let's say 80% of this Bitcoin, continue, just to account for the fee. And then let's see here. So, and then it generates basically a transfer summary. So it says preview transfer the recipient amount from one Theya vault, new iPhone, to Dante and Joe, which is this new vault that Dante and I just set up. And you could choose what you'd like to do. So if you don't want to spend a lot of money, if it's no rush to send this Bitcoin, you could choose slow. Or if you can click right in here to toggle that, or you can choose fast. So you get to select your transaction speed, and network fees get computed in real time. And then also for more advanced users, if you want to, you can select a custom fee rate, but we're not going to do that. We're just going to click fast, 4 sats per VByte, continue, and then you just slide to sign. Now, because the single key vault I'm moving this from is connected to my iPhone, all it's going to require is my Face ID. If I was sending a transaction out of a vault that required multiple signatures, or it was distributed across devices, once I clicked slide to sign, it would prompt me to plug in my Trezor or plug in my cold card and sign with those devices in order to move the funds. And Dante and I are going to demo that in a second.
And really quickly, again, Bitcoin 101, a lot of these things pop up and other people will just sweep them under the rug. So one of the questions that Andres asked earlier, Andres Perez, he said, can you touch on network fees with multi-sig versus single-sig? Joe, I'll give you that question, but really quickly, sort of like, again, going back to these analogies that we understand, the fees to move funds over the Visa network is 2.9% plus 30 cents, depending on the size and scale of the transaction. The thing is the same for the Bitcoin network, okay? Miners or Bitcoin miners are paid in 2 ways. Coinbase fees, these are rewards for finding a new block. And then they are also paid transaction fees from sending money to and from different addresses within the block. These are how these different blocks are created. If you went to Mempool Space, you see all of those different blocks in there. Those are just separate transactions that all have their different fees. And so whoever wins that block is paid the transaction fees plus the Coinbase fees in that particular order. So that's kind of how the Bitcoin network works at like a high level. But really quickly, is there any difference in fees between a single sig transaction or a multi-sig transaction?
Right. So actually, I do not know, and I will say I do not know. So you can do some more research on that. But personally, I am not sure. But because we're moving, because this is one Bitcoin wallet that has multiple private keys associated with it, my gut feeling is just to say that the fees are exactly the same, right? Because it's just, instead of moving funds from a wallet and signing it with a single sig, you're still just moving funds from a wallet, but instead you have multiple signatures. And so what I would say is that the fees are exactly the same, but I would go and do more research on that just to validate it.
Sure. And one other one while we're here, which I thought was an interesting question, and I'm not sure if you've gotten this yet, was from Blue G. Is seed phrase plus passphrase, the 25th word, considered multi-sig?
Right. So it would not be considered multi-sig. It would be considered like extra steps, extra security steps associated with your single sig wallet. But at the end of the day, it's still one signature required to send the transaction. And so even though you've backed up your seed phrase and you have a passphrase associated with it in order to transfer funds, like you have a seed phrase for backup purposes, you have a passphrase that's needed to actually get into the hardware device itself or the software wallet, whatever you're using, it's still only single signature because only one signature is required to move those funds. So it's added security measures, but it's still not multiple signatures.
Yep. Wanted
All
to
right.
clarify that.
Fantastic. Excellent. Thank you. Thank you to Blue, and thank you to Andres as well. Fantastic questions. So I'm going to go ahead and do this transfer here. I'm going to click slide. I'm going to slide it to sign. And again, it asks for my Face ID, and that's it. And it's sent. So it's ready to broadcast. Now you can look at the details of the transaction here. And right there, just like that, it says waiting for 3 network confirmations. And so basically what's happening right now is it is waiting to be included in a Bitcoin block. It's waited to be included in the next Bitcoin block that gets mined. Right now, sats per VByte is pretty low, so this should send pretty quickly. But you can look at where your transaction is in the mempool. We've included that. If you go down here, it says view on Explorer. You can now, for first things first, you can see the updates for the transaction. So you can see that it was created and then the signature was completed 1 minute ago or this minute. And then transaction broadcasted to network. Up top, it says waiting for 3 network confirmations. So we click view on Explorer. And now we can track where our transaction is in real time. So it says transaction first seen just now. Estimated time is 9 minutes from now. It will be put into the next block, and then it needs 3 confirmations. So more blocks mined in order to actually get broadcasted. So now you can see in real time, it was first seen 1 minute ago, ETA in 9 minutes. And so down here at the bottom as well, it says your transaction is near the top of the mempool and is expected to confirm soon.
That's actually really helpful information because some wallets or other things out there don't really give you a clear indication of where it's at and the amount of fees or the congestion in the network. Some do and some don't. And so that's really helpful for you to understand where your transaction is. And as we dive into this really quickly, I have a pending transaction on my side. So even though I wasn't the one sending the transaction, I'm being alerted on the Theya side that someone is trying to send a transaction into the vault, which is very cool. And another thing that is really valuable as we're kind of on this topic here is this idea about congestions in the network. So they say sats per VByte. A lot of people have a hard time understanding what that is and what that means. But essentially, oh, there you go. Kevin's trying to clarify here.
Thank you, Kevin.
Sort of just what I'm saying. Kevin said to clarify, we can, I think, put this up on the screen here. To clarify, more data means more VByte, which means more sats to send the same transaction. Correct. It's sort of like, as we make these other analogies, like a packet of information on the internet, right? Like the heavier the transaction. So if I'm sending a JPEG, which is really small, or a GIF, versus a full-blown MP4 1 gigabyte YouTube video, well, it's going to cost more for me to send that YouTube video than it does for me to send the JPEG. The same thing is true on the Bitcoin network and in terms of moving transactions through it. And so when people talk about the network's congested or sats per VByte, for all of the folks that are newer to Bitcoin, that's kind of what we're talking about. And that actually impacts where your transaction slots in and whether it's actually confirmed as a bearer asset or bearer transaction. So one of the things that's really important is we're talking about this whole thing because everyone talks about how Bitcoin is so slow and it'll never be used for commerce. Well, I'm here to tell you that that is actually and factually wrong because your transactions via ACH or even via Swift are moving at a several day pace. So what happens is when you swipe your card, again, sign a Single-Sig signature from your Visa card to move money from Chase to Chipotle, well, that's why in your bank account it shows up as pending because the actual money hasn't physically moved. And that's happening several days later as the banks settle. Why do banks close at 5 p.m.? Well, they're settling their ledger from the previous day's transactions. And so the Bitcoin network is happening in real time. So a transaction that moves in 10 minutes is roughly 20 to 30x faster than the average transaction that moves and happens in the real world. You just get a green check mark on the point of sale terminal that says, yep, they're good for it. But honestly, the money isn't actually moving. And so there's a lot of solutions and things that people are working on, whether it's the Lightning Network, whether it's layer twos, because in that world, the liquidity is already present in a channel. And so once you verified those transactions, they can go ahead and route money in real time versus a on-chain transaction. The money is moving 20 to 30 times faster from one bank to another bank in the Bitcoin network. So that's just like a 101 for all of the people who are maybe wondering what those things mean.
Very well said. Thank you, Dante. It appears instantaneous. When it comes to these traditional payments networks, but at the end of the day, they are not. They are not instantaneous. And so it looks like we're still awaiting 3 network confirmations. I want to flip back over to the vault that Dante and I created just so we could see what it shows on our end now. So we could see that the Bitcoin has already gone and appeared in our vault, but it still says that the transaction is pending. So you can click this drop-down menu to see all your incoming transactions. You could click into it to view those same transaction details on the receiving end. For both, when you're entering into a collaborative vault or Bitcoin is getting moved into your Theya vault in general, you'll get a notification that says Bitcoin is on its way. And so that's very helpful. That is very helpful to know, so you can keep in the know in real time, especially if you have multiple parties who are in a collaborative custody solution with you, what Bitcoin is going into your vault and out of your vault in real time. So Dante received that notification. And then as well, once all these network confirmations come in and we actually do a demo of signing funds out of the vault, you'll see that there are a suite of notifications that you'll get as well during that process. But again, you can go in and view all of the details. You can refresh the page, but this all updates in real time. So 1 pending transactions, but the balance, because it's on the way, it is now visible from within our vault.
So one of the things that's actually really critical is I've helped people to go through this, whether it was my time at Swan or otherwise. Multisig is a very valuable tool. And so let me give you a couple of like real practical implications for multisig. And multisig, where you have an institution like Theya, for example, that holds the third key. And then you have other solutions out there like OnRamp and Acropolis and some of those folks that are doing multi-custodial or like multi-institution custody. But the thing that this is really important, let's say that you held Bitcoin within a business context, within a treasury, right? And so you and a partner split the business 50-50. And so every month as profits come in, you do distributions and you split the income or the profits out between both of you. But let's say that you were going to sell the business one day because you've bought into the idea that Michael Saylor and Similar Scientific and MetaPlanet and hopefully Microsoft and all of these other companies, Square, have bought into, that holding Bitcoin as a treasury reserve asset is actually more valuable than me holding it in bonds or other assets that will lose value versus inflation. And so when you hold these assets in a business context and you have multiple owners, I've seen multisig, and this actually makes it incredibly easy. I've seen multisig being used in a way to say, well, I don't want one of my owners or one of the other partners in the company to be able to move Bitcoin without my signature. And so that's kind of like a real practical use case there. And then from a business context, if that person, something happens to that person, well, you still have a company and an institution and someone to call with that additional key, which is much different than having a third person with that third key, which you can do as well, but you're just creating another layer of trust. And we're already used to dealing with businesses and companies as a business, typically in a fiat context. So that's one area and one opportunity that I've seen, multisig being used and being leveraged. Another one is when it comes to having different advisors or different people help you to manage money or help you to manage funds, having someone to be able to view your money, to help you manage your portfolio or your Bitcoin holdings. Again, Bitcoin isn't a security, so this is very different than securities where you have very strict FINRA and SEC and custody laws. This is a scenario where you might have an advisor or someone who's helping to manage your Bitcoin funds on your behalf, and you would like them to be a viewer or a signer when it comes to your funds. This could be a digital executor. This could be a beneficiary. There's lots of areas where multi-sig could be really valuable that I would encourage you to think about. But Joe, maybe give the folks some use cases on ways that multi-sig is used, and you've seen Theya being used for that.
Absolutely. So what we've seen, there are a couple of things that we've seen. So the most popular one is exactly what Dante and I are doing now. So a collaborative vault between you and a trusted contact. We certainly have seen individuals taking the initiative. Oh, and by the way, we got our first confirmation. So we're waiting 2 more before we have access to the funds, but now our block that this transaction was in has been mined. And so if we go in here, we can click view on Explorer, and we could see that the transaction is 1 confirmation. And then once we have all 3, we'll be ready to go. And, Dante and I could move funds out of the vault if we'd like to. And so we've seen that the most popular way of using multi-sig has been between trusted contacts. We do not know who those trusted contacts are. We can only see the types of vaults that are being created. Again, Theya is completely no KYC. All we can see is the emails associated with vaults and what kinds of vaults are being created. We don't see the emails associated with those vaults. And so even on our end, it is completely and utterly private. But we have seen the most popular vaults being created are these collaborative arrangements. So one person holding 1 key, another person holding 1 key. And so whether that's a friend for orange pilling purposes or a spouse, that's the most popular setup we've seen. We've also seen businesses setting up vaults on Theya. We have business clients, and we could tell based on the URL that they are a business associated with their email that are creating these multi-sig vaults. And so exactly what you said, Dante, this is a very good solution for business customers who don't want a single point of failure in their setup and want 2 people from within the company to have the ability to access the funds and sign away the funds. And so from a corporate treasury management perspective, multi-sig is the way to go. And we know that it's been validated because business entities are setting up vaults on Theya. And so those are the most popular ways that we're seeing. We have several businesses that have created vaults in Theya. And then the outside of multi-sig, we've seen so many single key vaults set up. It's kind of unbelievable. And Theya, we built that in, even though we're a multi-sig app, because we know that more often than not, people want to have some kind of like payments wallet. And so people are using Theya as their payments wallet. And so from a multi-sig use case perspective, just being on this, having this product live for over a year now, we have seen collaborative custody has been the single most popular type of multi-sig arrangement. And then second to that is just one individual creating a multi-sig on their own across multiple devices. One thing is we also can't see the types of devices that are being used. But I would wager that over time, as they gets into the hands of more retail customers, the most popular arrangement that will be used will be between either 2 iPhones in a collaborative fashion or 1 iPhone and then 1 hardware wallet. Because of the modularity that we've built in with Theya, the ability to choose the types of wallets that you use, and the fact that Theya is already so retail focused, I would wager that over time, that's going to be the most popular key setup that we see. 1 iPhone and then 1 cold card. But again, the use cases are endless. But ultimately, if you are holding Bitcoin for the long term, multi-sig is what you need. You cannot trust an exchange because we have seen historically what exchanges do, fraud, manipulation, and we've seen how quickly in history gold custodians will fold under the pressure of an executive order. If there's any kind of civil asset forfeiture order that comes down, then your Bitcoin's gone from whatever exchange you're holding it on. And we've seen that there are, and if you hold it in a single key wallet, whether it's a hot wallet, a normal hot wallet, or a hardware device, that's still prone to human error. The benefit of multi-sig is that you can eliminate those single points of failure and secure your Bitcoin for years to come, but also for generations to come. And that's the benefit of multi-sig. That the real use case is not a specific key setup or a business use case or a wealth advisor use case. It is uh, securing your Bitcoin. That's it. It's the most going to be, I believe, the most popular method of securing your Bitcoin in 5, 10 years. Because in the same way that we don't hold our cash in a safe at home that we know the combo to, but can get taken from us, we won't hold our Bitcoin all in one place. And the whole idea behind multisig is that your Bitcoin's valuable. You shouldn't hold it in one place. That's why Theya makes it so easy to do.
So, a couple questions here because people have concerns about, well, isn't Theya the Theya app just a single point of failure now? Generally, I want to put this out there, and I want to hear Joe answer this question of what they're doing to kind of de-risk people's funds. But one of the things that's out there is these contracts, these multi-signature contracts, right? Can be copied and imported into other open source software projects. So with Spectre, you can do this. I know with Sparrow, you can do this as well. I know Unchained, I've never actually done this myself, but they kind of have I think it's called Caravan. They're kind of open source sidecar to their product or project. But what are ways that if Theya were to go out of business or something were to happen to Theya, that people would be able to move or access their funds?
That's a fantastic question. And actually, if you'll show the iPhone screen again, I'll show you exactly what you can do to prevent that risk. So, Theya, we are, just like Sparrow, just like any of these other entities, we hold a key on your behalf in the multisig arrangement, but you can export the information about your multisig vault and reconstruct it anywhere. At the end of the day, Theya, the Theya app, apart from the recovery key, serves as a front end to create multi-sig vaults. So if you fear that Theya will go bankrupt, or just from a best practices perspective, you want to have a backup of your multi-sig wallet, here's what you do. It's very simple. On the Theya YouTube channel and the Theya website, and in the Theya app itself, there's a sovereign recovery guide to actually export your descriptor from your multisig vault and reconstruct it. And you could reconstruct it in any open source software you want, whether it's Sparrow, whether it's Caravan. And that's basically what you can do to mitigate all risk associated with like the Theya headquarters exploding and all of our HSMs that we use to store our recovery keys exploding. Like worst case scenario, nuclear bomb drops. What do? This is what you do. You can go into your vault settings, and right here, this is the collaborative vault that I have set up with Dante. Vault name, Dante and Joe, vault information, export output descriptor. And so what you want to do is export the output descriptor associated with your vault. And if you click export, you can email it to yourself. Then what you can go ahead and do is you can restore your multi-sig vault, regardless of whatever devices you're using, whether it's your iPhone or your multi-sig, or excuse me, your hardware wallets inside of Sparrow. And I've actually created a video demoing that on the Theya YouTube channel. And then there's a sovereign recovery guide here as well that walks you through all of the steps in the process to recovering your funds using Sparrow Wallet. Sparrow Wallet is the example that we use, but the steps are as easy as importing your output descriptor, exporting it from Theya, importing it into Sparrow, connecting your associated hardware devices or your iPhone associated, and it's that simple. So, that is basically how Theya removes itself from the process in the edge case scenario that Theya, for whatever reason, explodes and is no longer around. That's how you recover your funds. You export your output descriptor, import it into any open source software like Sparrow, and then you're good to go. So Kevin asked, when recovering a 2 of 3, does it become a 2 of 2? Yes, it'll become a 2 of 2. The Theya key will be out of the situation, and the Theya recovery key will no longer be able to be used. So it will become a 2 of 2 once if you were to recover a vault inside of something like Sparrow from Theya. And I talk about that at the very end of the sovereign recovery demo that I did on YouTube. If you just type in Theya, we're the only YouTube channel called that, thankfully, and go to the tutorials playlist. You can scroll a little bit down, sovereign recovery guide, how to recover your funds. And I have a demonstration for that there.
What is your fee structure, and how do you do that, and how do you make money? One thing I was actually surprised about is that, it does involve a KYC process, but you can actually buy Bitcoin via Theya and it goes directly into these vaults. I didn't know that until you told me about that, Joe. But tell me about Theya, how you make fees, how you make money as a business, and how are your fees structured?
Absolutely. So it's a flat fee yearly. The Theya Essential Plan is $200 a year, which is less expensive than all our competitors, and a huge bargain if you consider that from a usability perspective and from a functionality perspective, Theya is superior in a lot of those regards. And so that's how we make money. It's no KYC. And you could pay via Stripe or via credit card or via um, the Bitcoin in your vault. You could pay via any of those methods, and it's just $200 a year for the Theya Essential Plan. And that includes, and I'll actually go and share my screen here so I could walk through the pricing page. Um, do, 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 do. So on the Theya website, theya.us, you can see all the details associated with this. I will go ahead and present, share screen. I will share this window. Perfect. So you'll find this on theya.us, theya.us/pricing. Now we have 3 different tiers. You could download Theya for free. You could sign up, you can get started. And within the Theya free tier, you have self-custodial mobile vaults. So if you want like the best mobile vault, payments vault in the game, you could download Theya, get started for free, create unlimited mobile vaults, and then just have a hot payments wallet for your Bitcoin. And you could also do the same thing with hardware wallets. So you can create unlimited single key hardware wallets and basically use Theya as like a front end to manage your cold card, for example, or your Trezor or your Ledger or your Passport, and very soon your Blockstream Jade. You also have encrypted mobile key backups and email support, and also access to the Bitcoin purchase facility. Theya Essential is where Multisig comes into play. And so other people are priced at about $250, and then they have other fees associated with that as well, like moving funds and things like that. If you use other services, charge fees if you use their key to move funds, whatever. Theya Essential, it's $199 a year, no hidden fees whatsoever, and that gets you access to unlimited 2 of 3 multi-sig vaults, and unlimited cold storage vaults. As I mentioned before, you could use whatever hardware wallets you'd like. Unlimited collaborative vaults, so like the one that Dante and I just set up today. You get key replacement support for lost keys. So in the event that you lose one of your keys, the Theya recovery key is there because it's multi-sig. We can activate our recovery key and help you recover your funds in the event you lose one of your keys. You get priority email and live chat support. So there's live chat in the Theya app. You'll probably be chatting with me most of the time. I receive the notification straight to my phone. Over time, as we scale and we become a bigger company, we'll get a dedicated support staff. But for now, you get to talk directly to me or one of our co-founders, and also low-fee Bitcoin purchases. So we have a Bitcoin purchase facility in the app, which was we took out in the latest update because of something to do with Apple, but we're putting it back in the next update. And basically with Theya Essential, you'll have a very small spread, one of the least expensive in the industry to purchase Bitcoin. And you could buy Bitcoin directly to your cold storage. And then Theya Pro, which is going to be coming soon, that's on our roadmap. We're looking at Q1 for next year of that. It'll be everything in the Essential Plan. Plus, we're going to add 3 of 5 support, which is an even more robust multi-sig solution. Inheritance support. So we're developing a product specifically for Bitcoin inheritance. So if you want to pass this on to your kids, and then 1 hour dedicated support response time. So within an hour, we'll hop on a call with you. We also will offer concierge onboarding with video chat support and 0 fee Bitcoin purchases. So currently, again, because we are still such a small company, you can hop on a one-on-one call with me or the co-founders for free. Just visit theya.us and you can schedule any time in there to speak with me one-on-one about your own individual needs, and I'll help you through that. But over time, that'll be available in Theya Pro. But this is the way we make money. No hidden fees whatsoever. You can create unlimited multi-sig vaults for $199 a year. It's very competitive in the industry. From a price perspective, we are 25% lower than everybody else in terms of price. And that's a heck of a bargain for what is, in my opinion, the easiest solution out there for multi-sig.
Hey, Joe, I don't mean to cut you off, but I just got this notification for the transaction being confirmed.
There you go. And the
Like, and I
transaction is
actually
confirmed.
got it. It wasn't like me saying I was on the phone, but showing the camera app. I'm just trolling, guys. Chill. Okay. But honestly, I did get the transaction. So let's take a look and sign a transaction here.
Beautiful. I love it. That was a subtle jab at the Democratic candidate for president. I love it. Anyway, so now that we have the funds in the vault, I'm going to reshare my iPhone screen so we could pick up the final part of the demo here, which is Dante and I showing you before we sign off how to sign a transaction in a multi-sig setup in Theya. So I'm going to share my screen here, and perfect. All right, so here we are. We are now in the vault, and we could see that the transaction has been confirmed. So you could still view it on the Block Explorer if you'd like to. You can see all the info, where it was sent from, when it was sent, the transaction ID. But now we're going to go here and we're going to send these funds away. We're going to show you exactly what that looks like. So it's as simple as clicking send, and then either Dante or myself can initiate this. That's important to remember. Because it's collaborative, either Dante or me can initiate the transaction, and then the other one will be prompted to sign. So I'm going to click send, and then we need to ensure the recipient's Bitcoin address is accurate. And so what I'm going to do is I'm going to click I understand. We're going to send it right back to the other vault that I had. We're going to send it to, which one of these was it? Give me a moment here while I scroll through and find it. I think it was this one. So we're going to send it to this vault. We're going to send 80% of the funds in here. So $7.54. Continue. And this is going to look exactly like what it was before, except only this time when I slide to sign, I'll sign on my end with my Face ID. And Dante will be prompted to sign on his end. And so you'll see here, it says awaiting signature, your iPhone is signed. And then it will say Dante at subtext.co has not signed. And so he will get a notification on his end to go and confirm that signature.
Joe, I should reject this transaction. That's way too much, way too many sats to be sending. I'm just kidding. I'm going to go ahead and sign that. All right.
Fantastic. And there we go. Dante has signed on his end. And just like that, that is how you sign a transaction out of a collaborative vault in Theya. Really easy, really straightforward. If there are hardware wallets associated, Dante would need to hook that up. But because it's a 2 iPhone setup, it's that easy. It is really that easy, guys. And that's essentially everything. So just like before the transaction will be broadcasted, we don't need to show that. But that is front to back how Theya works, how you set it up, self-custody 101, the benefits of multi-sig, and what it actually looks like to use the app.
Wow, that was really, I love doing stuff like this because I like to, like you said, demystify Bitcoin. A lot of people make things really difficult and how hard it is to do. To confirm a bank account or to add a new bank account to send, even in the real world, like I will get, when I'm trying to connect my different bank accounts for different businesses or things that I have, I'll get like a 25-cent, transaction. I'll get an email 2 days later. Did you get the 25-cent transaction that we sent? And then I have to email someone back. Yes, I got it. And then they confirm those things. Or then I'm, selling my soul to the banking system when I log in via Plaid, all of those different things. And this is so much more trustless, so much more simplified, and reduces a lot of the friction. And I think I really wanted to do this demo because I really want people to take seriously self-custody, right? We talk about umbrellas. It's better to have it and not need it than need it and not have it. And there will be a time in this next cycle. Everyone talks about number go up, but we have to be just as concerned with freedom go up. And if Bitcoin does what we think it will do, well, we talked about all the macro things from the beginning of this cycle here. It's a $1.5 trillion asset class that we think is going to overtake a $19 trillion asset class in gold, and then soon engulf digital or physical real estate, $100 trillion asset or $300 trillion asset class, stocks, another $100 trillion asset class, bonds, another $120 trillion asset class. We have $1.5 trillion flowing into $350 trillion worth of assets. Like, the trade is very simple, but what does that mean in terms of the security that you need and the amount of attention that you should pay to actually securing it? And Bitcoin ETFs are great, but they're IOUs. They are not the real thing. They are a mirage to Bitcoin. And the thing about Bitcoin is that you can get for cheap in a very simple solution all of the high beta and high growth characteristics of this once in a generation asset class that Michael Saylor says the hurdle rate's 46% a year. So you can get that kind of growth in a portfolio. You'd be the best hedge fund manager of all time. Warren Buffett, they'd be writing books about you and not Warren Buffett if you just bought and hold Bitcoin. But you don't have to create all these complex structures. You don't have to do all of the incredible things. Go buy a hardware wallet that's a Blockstream Jade for $49, or any one of Trezor's 1 through 5 levels of different products they have, or even a Ledger, or a Cold Card, or a Passport Foundation, which are supporters of the Simply Bitcoin channel, or other things. Those devices are just a gateway towards helping you to actually own the real thing. And it's not hard to do. That's the goal that I want to leave us with today. I want to encourage you in your journey to take the leap. It's not as dangerous as you think, and start small. With these transactions, I would start with a $5 transaction. I would download again one of those wallets that you can just with your iPhone, the Moon wallet, the Blue wallet. When it asks you to write down those 12 words when you download and open the Blue wallet, do it. You're learning what a private key is for the first time. You're understanding what a seed phrase is. And that's the beginning foundational knowledge that you should practice before Bitcoin gets to this level and this price. Or when something happens, when there could be a 6102 attack in the future, you're going to be prepared. And that's what I really want for this webinar. Joe, any other closing final thoughts or things that you want to give to the people on self-custody, on multi-sig, and why it's so important?
I'd echo the exact same thing that you said, Dante. It's a begin taking custody of your Bitcoin seriously. We are moving into an age, the golden age. What will be the golden age of Bitcoin? We'll look back on this next 4 years, next 5 years, next decade, and recognize this is the time that Bitcoin monetized to a level that it began usurping these massive traditional asset classes like gold at $18 trillion, like the US Treasury market at $25 trillion. Bitcoin's upside this cycle is more than anybody can fathom at this current moment. But alongside that comes a responsibility, not just to custody your Bitcoin holdings for yourself, but to make sure that it is secure for generations to come. And the best thing you could do for yourself is begin taking self custody seriously, begin learning about what a private key is, what key management is, and start learning about multisig. Columbus is a fantastic group to connect with other Bitcoiners who are on the same journey as you, to receive that kind of help. And Theya is a great app that you can use, that's very user friendly on your journey with self custody. If you haven't self custodied before, Theya is a fantastic solution for you. And if you're looking to set up multi-sig, but you are fearful of the complexity associated with something like Sparrow Wallet and you don't want to screw it up, Theya is also for you. So I would encourage everybody on this call and listening to this playback to begin learning more about self-custody and taking it seriously so that down the line, as Bitcoin gets more valuable, you have a security solution that is commensurate with the value of the asset that you hold.
Hey, I love that. With that, we're signing off for today. This is Dante Cook with Bitcoin Simply. Happy stacking.